Hello, 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 everyone. Welcome, community. Happy Thursday to all of you. Very, very excited having you all here today with us. Looking forward to another amazing live stream on YouTube today with you. Greetings to all of you that were able to make it today in today's live. Really excited about today. Another opportunity for us to discuss our ecosystem, to discuss about the market, the crypto market, understand what our industry is about, and to have a bigger picture, a broader picture of what this industry is all about. And then, as always, we always like to zoom in and build bridges, build parallels, and see how we can combine the two and see how, make more sense out of it. So as always, I'm really excited. Again, it's a Thursday. These YouTube sessions are great because I can share my screen with you. I can share articles with you. As you're listening, you can follow along visually as well. So this is very important. This is nice. And it's just a different environment compared to the usual sessions that we have on our VCs or on our Twitter space like we had in our last two community events. So without further ado, I would really like to jump in to these sessions. Time is of the essence. Always like to keep these sessions, as always, very informative, educational, and inspirational. And today we are going full circle. We are closing in. This whole week, starting Saturday, our main topic on Saturday was inflation. No, it was money. We were talking about money and fiat currency, how all that happened, and inflation was the topic. And then on Monday, on our Twitter space, we looked at sustainability. We looked at the three different ways or attempts that the industry or the financial industry tried to build a sustainable monetary system. And today, we're going to go full circle and close in on importance or lack of liquidity in the space. So we can't close this series out without ending with a bang, and that is with liquidity. So I would really highly encourage all of us that are listening to really listen. Start on Saturday, where we talk about money. What is money? What defines money? And then how the fiat currency came into being. And then on our Twitter space, we continued with sustainability. We looked at three different attempts on how the industry attempted to create a sustainable monetary system. So I highly encourage you to listen to those two events also. And then today, of course, we go full circle. Today we're going to close out the series. Basically, it's part 1, 2, and today is the third one. And we're going to close it out. So those who were not there for Saturday and Monday, don't worry, I'll just briefly go through it. But I encourage you, if you need more details, to really go through Twitter's our Telegram group. There you'll be able to listen to the VC Twitter space. It's on our Twitter account. You'll be able to go there as well and listen. And these are all on our main BRL Bullrun accounts. And then today, of course, we are going to close out on liquidity and importance of it. So as always, this is how the program always goes. I always like to welcome the community first, see who is here, and then also get into the topic of the day. And then I'll come full circle again to you, community, and see if you have any feedbacks, inputs, or anything that you want to add, or any other questions that you want us to break down in more details. And then we'll close out the session like that. So with that said, let me come and see who is here today. And I welcome you and appreciate you for showing up. Another Thursday, another Bullrun Community Live event. Yes, very excited about today. Welcome, Shema. My brother Demo Crypto, hello Steve and community. I'm always ready and excited for these live events. So am I, my good brother. Very happy, very glad having you here. It's very exciting, and I'm really excited about today's topic as well. And hopefully, I always like to encourage you as well. Get your questions ready, your feedbacks, your follow-up questions, and let's make these sessions interesting. Let's make them let's make them let's make them a dialogue. So if you have any at the end, feel free to do so. Exactly. So who else is here? Bull Runners, hello Mr. Steve, looking forward to the great session. Likewise, looking to the great session as well. A good brother Theo, let's go Bull Run family, looking forward to another amazing live today. Welcome, brother Theo. Always happy to have you here as well. And I'm just as excited about today's topic as well. Nancy, happy Thursday, BRL family. Happy Thursday to you too. Very happy to be here. Very excited. Winner Survivor, great. Greetings, Bull Run. Hello, Steve. Glad to be here. Looking forward to another informative and educational live stream. So am I. Thank you very much. Welcome to all of you that are able to make it. None other than Miss Patricia herself. Hello, Steve. Thank you again for this live event. I have come to the fountain of knowledge. Thank you. I thank you for showing up, for being so consistent and always being part of these live events. You are very much appreciated, and I'm always very excited to see you in these community events, Miss Patricia. Welcome. And Miss Sharon, nice to see you here as well. Hello, family, Bullrun.Live. Hello back to you as well, Miss Sharon. Always happy to see you also, being very consistent and in these live events as well. With that said, let's get into today's topic. Like I said, to do that, let me share my screen. Like I say, these live sessions are extremely valuable because it gives us the opportunity to really visualize things. So as I'm talking about items, as I'm talking about topics, I can like visualize them. And we as human beings, we tend to consume information easier if we not just hear it, but if we can see it as well. So like I said, I'm not going into details. I encourage you to go back on Saturday VC on our main Telegram, where you can listen into details. We discussed fiat money. We discussed what money is. We discussed, what fiat currency is, and the general topic was inflation. And so, just in a nutshell, we discussed what money is. And money is, to be considered money, money has to meet three criteria. The first one is a medium of exchange. It has to, secondly, it's a medium of exchange, and then it has to be a unit of measurement. And then also thirdly, a store of value. It has to meet all these criteria. And before it can be considered money. So with that said, money back then at the beginning, it was started with seashells and cocoa beans and all that stuff. And that, of course, didn't meet the criteria that those three criteria like we just discussed, because you were not able to, first of all, before all that, people used to barter. People used to barter, meaning like, I'll give you my sheep for your cow. I'll give you my milk for some sugar. I'll give you some, mangoes for oranges, and so on and so forth. So that didn't meet the criteria of money. And so that's how it evolved into in the ancient days, it evolved into seashells and cocoa beans. And then from there, It evolved even further into more other commodities, more like precious stones, precious metals like silver and gold. These were then minted, and it was really tiresome to carry these around. So what happened was you got a promissory note, basically, that you had, and you could deposit your metals, be it silver or gold, and primarily it was gold. Gold metals, you could deposit these at your local bank. They'll give you like this note, your promissory note, that that was circulating within the economy. But whenever you're ready, you were able to come back to your bank and redeem them, redeem those notes for gold. Back then, it was like for $35, you had like an ounce of gold. So that was like the exchange rate, basically. Now, it wasn't the same like we are right now, because these notes, obviously, these were backed by gold itself. So it wasn't the fiat currency as we know right now, not yet. Next step was, and these were, this is how the traders were using the system until in the 18 and 1900s. That's when now countries really started establishing, using this same concept. This is when now nations adopted this as well. So nations said, okay, let's also have our local currencies backed by gold. And that's what happened. And unfortunately, not everyone had the same amount of gold like other nations. Those who didn't have much were limited to only have a certain amount of currency, because they couldn't print above what they had. And obviously that wasn't sustainable. And many printed above that. And that's hence the inflation then. And we'll get to that later as we go through the session. But just in a nutshell, that's how the fiat currency actually came to be, because what happened was after World War II, the US was an economic power because they held over 80% of the gold reserves, of the global gold reserves. And they were designated in 1944, Bretton Woods. That was in Bretton Woods, and that's why it's also known as the Bretton Woods system, monetary system. They designated the US to be the sole global reserve currency that is pegged directly to gold. Any other fiat currency was then pegged, or tied to the US dollar. And hence, that's how the US dollar became the global reserve currency since then, since 1944. And since 1933, that's when the so-called gold standard was implemented. Fast forward 40 years, and 1971, when the US dollar also went through the same issue that the Germans went through, hyperinflation, and they started investing more or using more funds than they had gold for. And also, they started printing more than they had the backing for. This spooked the other nations, caused panic, and they came to redeem their gold. This depleted the reserves of gold for the US, and that's why President Nixon then pulled the plug and decided that we are getting off gold standard, and that was the birth of the current monetary system we know today as the fiat currency. So in a nutshell, that's what was discussed. If you want more details, please, like I said, visit our Telegram group and listen to the latest VC that we had, and that was the topic. So that's how this new monetary system called fiat is inflationary, because it's not backed by anything and it can be printed at will. It loses purchasing power in the long run, and so on and so forth. So this was on Saturday. And then on when was it? On Monday, on our Twitter space, we discussed inflation, sustainability. And sustainability also goes hand in hand with the topic on Saturday, which is inflation. So due to this, since mankind has always tried to find a way how they can create a sustainable monetary system. And they tried it through the backing of gold. They tried it through using debt instruments, such as money market funds, and then use those as collateral. And lastly, they tried like our current fiat system is right now. It's not backed by anything. So these are ways that were tried and tested to see how we can have a sustainable monetary system. However, as history has proven to us, the Chinese, the Roman, the Spanish, the French, and the German empires before the US, they all collapsed due to inflation. So this is a big issue, and sustainability is key. And no monetary system to this date has been designed that is really sustainable, that is built in a way that in the long run it's a sustainable system. Now, inflationary risk refers to, of course, that inflation will negatively affect the performance of your investment. And the big takeaway here is that in the long run, inflation results in depletion of the purchasing power. That's the main takeaway here in this. Now, if we go to the next article here. Now, first of all, there's a big commotion in regards to ETFs approval right now. Spot ETFs, Bitcoin spot ETFs. The entire industry is really thrilled. We are very hyped. We're looking forward to this ETF, and everybody's really excited. Today, I just want to highlight and point out the danger of spot ETFs and the whole idea behind these spot ETFs. I just want to paint a big picture. As always, this is all part of painting the big picture to highlight the challenges that we have in the space and what we are experiencing. Right now, we have a potential of $3 trillion US getting into the crypto space. That is a 300% from what we have right now, because currently our market cap sits at 1 trillion, okay? 1.3 trillion to be exact. So that would be like a 300% growth. And $3 trillion market is about to enter the space through this Bitcoin spot ETFs alone. So this is huge. This will triple the market immediately just by approving this Bitcoin ETFs. At the same time, this just shows you the impact that the approval of this Bitcoin ETFs will have on the market. And this is vital to understand, because we are all very, there's euphoria in the space. Everybody's excited, but let's zoom out and look at the dangers, the challenges that come along with this. This is part of today's topic. This is all about liquidity now. We're talking about liquidity. And as we understand, entire infrastructures are about to enter the blockchain technology. We discussed this many times. Entire SWIFT markets, the entire SWIFT market infrastructure is about to enter the blockchain. And we are talking about billions of volume, of daily volume. We're talking about Visa, payment processors, PayPal, payment processors, all coming on chain. And the biggest and the largest one is the tokenizations, of course, of the entire stock market, derivatives market, commodities market. The entire financial system is about to also come on chain as well. This will bring with it volume, high volume. And these large institutions are speculating on this, and they're anticipating this, and they will be taking advantage of it. And in today's session, I'm going to highlight exactly what's going to happen. Bearing this in mind, let's go to the next step. So right now, Bitcoin has been holding strong despite the market conditions right now. And to keep it in perspective, Bitcoin, since its all-time high, it's actually one of the stronger cryptocurrencies, even though it's down 49% since its all-time high. So 49% it's down since its all-time high. So it's really strong compared to other cryptocurrencies. That's a strong metric. That's a strong number. Now you ask yourself, why is this? Why was it able to retain so much stability compared to others? And we'll get into that. Let's look at some numbers first. We looked at Bitcoin's current market cap right now, and it's larger than Tesla itself. And this despite the bear market. Of course, Tesla also is experiencing the bear market, but this is just to compare and to highlight how such a large and established institution is lagging behind Bitcoin, which is only 15 years so far, not even well adopted yet, and sitting at 669, let's say 670 billion in market cap. So this is way more than Tesla 630 billion. And it's also bigger. If we see here, it also has a larger market cap than Visa. Visa has 525 billion. And what's the other one? The other one is a Taiwan semiconductor manufacturing company sitting at 447 billion. So these are real world, well-regulated, large institutions that have been in the space for decades. And yet such a young cryptocurrency is already having a market cap, which is actually sitting at 50% lower than its all-time high, but it's still above these large, well-established institutions. So all this is just part of pointing out or painting a larger picture of what's been happening. So you ask yourself, why has it been that Bitcoin has been holding strong despite all these tribulations? This is one of the reasons. You see here that in the last 24 hours, $1 billion worth of Bitcoin have been leaving exchanges. So this means that individuals have been taking away their Bitcoins and putting them in their personal wallets. And that's what's been happening. They've been leaving centralized exchanges or decentralized exchanges and going over to individual wallets. This is big because this means that they're ready or they're preparing to make some moves. And keep in mind, these are institutions. If you talk about $1 billion worth of Bitcoin, or like in this next article, we're looking at a whale sitting on 6,500 worth of Bitcoin, which is right now at 230 million US dollar worth of Bitcoin. These are large institutions or large whales. So these are big numbers we're looking at. And because they have been moving their Bitcoin from centralized exchanges or decentralized exchanges to their personal wallets, this of course brings stability, it brings purchasing power, and this means that these Bitcoins are not going to get sold anytime soon. And this is why Bitcoin has been really holding on strong, because these big whales, big institutions are now taking money out of the exchanges. And this is not by coincidence. We'll get to the reason why they're doing it. And just hoarding it in their own wallets, gearing it, preparing it, getting ready to make a move. So this is the reason why. Now, talking about liquidity, we also see here that venture capitalist investments have been really down, has been really low. Actually, it's a record low. There's no liquidity entering, new money entering the space right now. Like we also discussed, a lot of black swan events. Crypto has a very bad reputation as far as scams. It's not regulated. There's so many events that happen with centralized exchanges, many lawsuits, many security breaches. You can name so many things that really causes a lot of potential newcomers in the space to just stay on the sideline and stay away from the crypto space. Also, these are topics, if you discuss crypto, and you can maybe relate to this cryptocurrency with your coworkers, your family, your friends, they're always very hesitant to discuss it with you. They always see it as a scam, as a scheme, and as something that is not here for the future. And that's oftentimes what people misunderstand. People look at cryptocurrency as currencies, but they don't understand that it's actually the technology behind it that adds value to us. With that said, this is what this is now what gets now we're getting to shaky waters right now. This is something that many don't understand, that our largest cryptocurrency, Bitcoin, really is in a liquidity crisis. And this article just highlights that if only 463 Bitcoin alone, just 463 Bitcoin alone can tip the Bitcoin price by a full percentage, 1%. So at a first glance, you would think that, well, this doesn't tell me much. What does this mean? What does this say? And let's make some sense out of this. Keep in mind this number, 463 Bitcoin, could tip the price by 1%. So with that said, let's first understand why are large institutions taking their money out of exchanges and keeping them in their secured wallets. To understand that, we need to really understand this article right here. JP Morgan, at some point, just 2 years ago, their CEO was completely against Bitcoin and cryptocurrency in general. They were speaking out negatively about cryptocurrency, talking about how it has no value and all that. And that caused Bitcoin to crash by 20%. And what happened was, right after that, like this article said, they made a surprise move, a game-changing move, they call it. So after they waited until the crypto crashed by $2 trillion. And like we know, at its all-time high, cryptocurrency market cap was at 3 trillion, but now we're down to 1 trillion. So it lost 2 trillion US dollars in market cap. And that's when these large institutions pounced on this opportunity, and they got Bitcoin when it was really, really cheap. So it went, actually, the year started with a Bitcoin at 17,000 actually. And that's when these large institutions actually jumped in on Bitcoin early on. And mostly these institutions that applied for Bitcoin spot ETFs, they're not purchasing Bitcoin now. They purchased Bitcoin 1 year, 2 years back when it was still low, especially last year is at its lowest. That's when really these large institutions that applied for Bitcoin spot ETFs purchased Bitcoin at very low prices. So after causing fear, uncertainty, and doubt in the market, and Bitcoin plunged by 20%, that's when they jumped in and made large purchases of Bitcoin. Now, I want us to remember this number right here. 463 Bitcoin can cause the price of Bitcoin to crash by 1%. Now, we established that large institutions are entering the space. We discussed them all. This is a graph. I'm not sure how clear it is, but basically what this graph shows is that which industries or which companies, institutions are holding Bitcoin, and the current total value right now of Bitcoin. So right now, the so-called ETFs that we are all waiting for, like we looked at the beginning, where are they? We looked at these potentially $3 trillion worth of Bitcoin ETFs, spot ETFs, once approved. That's the type of liquidity that is about to enter the space. Now, ETF institutions are holding close to 4% of all Bitcoin in circulation. Countries such as Venezuela, who actually made Bitcoin as their legal tender, public companies and private companies. So in total, these different industries, ETFs, institutions, money managers, countries, public and private companies are holding over 1.3 million Bitcoins right now. And in total, that's close to 39 billion worth of Bitcoin. 39 billion worth of Bitcoin. Now, obviously, because of this, many so-called Bitcoin billionaires were made, and also those who have 100 million and above. And also, we looked at how only 463 Bitcoin alone causes a 1% shift in price. So if we pick up the calculator right now, and we look at the total amount of Bitcoin these different industries are holding, which is 1,359,781, and we divide that by the 463, it will give us a number. And this number, we have to multiply this number. No, this number is in percentage. So it's 2,900. If we multiply this by 1%, this means that close to 3,000%. If these institutions, the money managers, the countries, the public companies, once Bitcoin hits all-time high again, and they start cashing out, Bitcoin will crash by close to 3,000%. This is what basically this economists calculated and found out that that would be the case. That would be the case if these individuals would decide to sell. It will crash Bitcoin by close to 3,000%. So all the joy, all the euphoria that liquidity is coming, entering the space, all these different infrastructure, and everybody's pointing towards Bitcoin, get some Bitcoin and all that. This causes a lot of fear of missing out, a lot of FOMO. So people really enter the space and get themselves Bitcoin and all that. However, they don't understand that Bitcoin has a liquidity crisis, and that these large players are shifting their money out of the market and bringing them into their own wallets, preparing for something. Now, this is where we get to the next topic. What are they preparing for? Why are these big institutions removing their money from exchanges, the Bitcoin from exchanges, and putting them in their wallets? Now, this brings us to this now. This is exactly the reason why. Coinbase has officially been approved to offer futures trading in the US. And this is for institutional. This is for institutions, not for retailers like you and myself. This is mainly for institutions. You have to have a certain amount of portfolio, $1 million and above, to be able to trade. So these are large institutions, big whales, such as these, that were moving their funds back and forth, like we just saw. So they are getting ready. First of all, let's understand what futures trading actually is. Futures trading is a contract that represents legal agreement of purchase or sale of an asset in a predetermined price on a future date. So futures is not the same like the spot ETFs that people are waiting for, the Bitcoin spot ETFs. Futures ETFs are for down the road, like the name suggests. So you bet on a future price of Bitcoin, and then you bet against it. So let me explain what's happening here, because first of all, you can't enter into this futures. You can't enter in this futures exchange without having a spot wallet. So you have to have you have to have, like with Coinbase, you have to establish a spot ETF account. So that means you have to be buying Bitcoin at its current price and then bet whether if its price will go up or down. And this is what large institutions like to do because it helps them to hedge against risks or to diversify their portfolio or to use leverage, meaning credit, loans to trade. So this is the reason why you see these large institutions removing their Bitcoin, putting them in their own wallets so that they can do futures trading. Why is futures trading risky? It's because now you can bet against the market. And we've seen this before. Usually what we know is you can make money when the market goes up. But these large institutions monetize even more when the market goes down, meaning when it's ready to crash again. And these institutions understand the cycles. These are economists who understand how these cycles work. They understand that during the bull run, these numbers will be hitting all-time high again, and then eventually it will have to come down. So this futures trading gives traders the opportunity, or gives these institutions the opportunity to bet that the price of Bitcoin is going to crash. So as everybody else is losing money, they're actually making money because they are betting using these futures ETFs, and they're trading against the market, betting that the price will crash, which it's obviously going to happen. And this is how they make the big money. So this is the reason why you see these big whale wallets cashing out, because they got in early in this they got this Bitcoin very cheap at its lowest in back last year or even 2 years ago, and now they're removing the profits they already made and getting ready to be doing futures trades, meaning they are getting ready to bet against the market. So as the price goes up, it will be easier for them to take profits, and then as the market goes down, that's when they're actually even going to gain even more, because now they're betting against the market that is going to crash. So with this in mind, and also understanding how Bitcoin is going through a liquidity crisis, and that this is a real issue right now in the space, and we established how only 463 Bitcoin, which is roughly about 12 million, is enough for one to crash Bitcoin by 1%. And we're talking about trillions here. We looked at $3 trillion worth of Bitcoin spot ETFs that is about to enter the space. And these are getting ready to be traded, future traded, or shorted, meaning that betting against the market. So this is going to cause Bitcoin to crash heavily. So be aware of these traps that are being set in the industry right now, of hyping the largest cryptocurrency right now, making people to FOMO, fear of missing out, and entering into Bitcoin unknowingly, just to be set a trap. Because now these large institutions, while everybody is jumping into Bitcoin and trying to secure themselves a bag, they're slowly exiting the market. In 24 hours alone, they removed over $1 billion worth of Bitcoin. They're getting ready to bet against the market that it's going to crash using futures trading, which has been approved by Coinbase. And by the way, coincidentally, Coinbase is backed by BlackRock, and BlackRock is heavily using leverage. They have they and JP Morgan are using the money market funds of BlackRock to use as collateral. This is perfect exactly for this futures trading. You can hedge against the collateralized money market funds and bet against the market and make billions out of it. And this is what these large institutions are getting ready to do. So as everybody is FOMOing into Bitcoin, they are exiting. They're doing the opposite. They're getting out and getting ready to bet against the market, so that once it hits the peak and everybody wants to be part of that Bitcoin all-time high, You are just the exit liquidity, and the market, they're getting to bet against the market, make billions of dollars off of you, and exit the market that way. And it will look just as normal, because this is what happens on every cycle. There's a boom and there's a bust cycle. It will be just another day, just another cycle, and there will be nothing unusual about it. But they'll be walking away with billions of dollars in profits, while you'll be losing a lot as the prices. And this is not just Bitcoin. Of course, other large cryptocurrencies as well will be crashing, because that's just how it is. And with this futures trading, large institutions are usually betting against the market, and this is where they make their money. So this is just to point out what's getting ready to happen. And another thing also is that as the cryptocurrencies will be bet against through futures trading, meanwhile, stablecoins are hitting all-time highs as far as revenues or as far as reserves are concerned. Tether is the best example. In this third quarter alone, they hit the highest percentage of cash and cash equivalents ever. So as Bitcoin is busy struggling with liquidity and experiencing liquidity crisis, and as whales are slowly exiting and preparing to bet against the market, stablecoins are making money hands over fist. And the best way to illustrate this is by showing you this. I'm not sure how well you see it. So right now, the Tether market cap. First of all, let's look at Tether. Tether is the third largest cryptocurrency, only behind Bitcoin and Ethereum. They're sitting at close to 85 billion in market cap. Out of the 85 billion in market cap, they have 74 billion in US Treasury bills. We discussed this before. These are actually debts, US debts, and US stablecoins issuers are required to purchase US debts. This is how they are backing their stablecoins. They're required by regulators to purchase US debts. And right now, they're holding 74 billion worth of US debts. And out of these 74 billion, they are making 4.7%, close to 5% annually, just on interest. That's why these institutions are making large revenues. It's very lucrative for them to be stablecoin issuers. They are so profitable that they're actually having 4.3 billion in excess. This is like more than they need. 4.3 billion in excess right now. So that means they could print 4.3 billion more USDT right now if they wanted to, because they have excess reserves. This is amazing. And this is during a bear market. So you can imagine what's going to happen during a bull market. But this is done by design. How else will these institutions be able to cash out after they do the futures trading? So this is what I was talking about when I was saying that stable coins will play a major role during this next bull run, because this is the only way how these large institutions will be able to cash out all their gains that they'll be making in the billions. So this is how everything is lined up and put in place for the institutions to gain. Because first of all, they're the only ones that will be using this platform, this futures platform. They'll be the ones betting against the market and making money both ways. As Bitcoin hits all-time high, that's how they'll make their return on investment. But as Bitcoin goes back down by 60 or 70% after the bull run, that's how they're going to cash in right again. So all this euphoria, all this joy in regards to Bitcoin ETFs and all that, these large institutions, they already made their purchases. They already bought in cheap on Bitcoin, while retailers will be buying Bitcoin at all-time highs at 70,000, 80,000, 50,000. So they already had purchased long time before everybody else. So they're just waiting for you to come in to jump in the bandwagon and get into this FOMO, fear of missing out mode, and then chip in for them so that they can exit slowly, do their futures trades, and then bet against the market. And their colleagues already have prepared excess reserves for them to exit the market appropriately. So this is what's this is the large picture. This is what the challenge is right now. We looked at on Saturday how inflation is affecting the industry, how the current monetary system is set up in a way that it's extremely inflationary. On Monday, we looked at the sustainability aspects of the former gold standard that was not sustainable. It crashed Germany and all other currencies as well. And even the largest gold holder globally, the US, even they right now, as you see, they lost purchasing power of 96% since 1971 alone. So this just shows you how unsustainable these monetary systems have been, and how important sustainability is, and how to keep inflation in check. And now today's topic was liquidity, and we saw how that has been a big issue as well. And these individuals, they understand this, that there's a lack of liquidity. This is why they're removing the Bitcoins, and they'll make more money betting against the market than because, like I said, right now, if we look at Bitcoin, there's only 920 million in the liquidity. So if they go the traditional way by just trying to get money out of Bitcoin the right way, there is not enough liquidity for everyone. There's only 920 million in liquidity, and there are 6 Bitcoin billionaires, and then there's 78. Where is it? And then there's 78 right here. There's 78 so-called centimillionaires, meaning they have over 100 million and above in Bitcoin. So you imagine, we only have 929 million in the liquidity, and we have 6 billionaires, 78, 100 million and above Bitcoin worth of holders. And this is why this smart money, they understand that we can compete. So let's remove our Bitcoin, let's bet against the market, and we are guaranteed as a price, we are guaranteed a certain income, and this will not come out of the liquidity because it's a whole different market. So they're making more money betting against the market than those who will be fighting over this liquidity. And there's just too many billionaires that will be fighting over this little liquidity. So that's just to point the picture of the challenge we're facing right now. It's a liquidity crisis that we're facing. It's an inflationary crisis that we're facing. And it's a sustainability issue, depending on the monetary systems and the approaches we've been taking. These systems have not been sustainable. So with that said, let's zoom back into our platform, and let's look at how we're addressing these challenges. First of all, and I always like to treat this as those who don't know anything about our ecosystem. First of all, we always took a solution approach. That's the key. Take a solution approach. Look at the industry as it is. Identify the challenges within the industry. We identified them. Like I said, on Saturday, we discussed the inflation challenge, because inflation destroys currencies. On Monday, on our Twitter space, we discussed sustainability. We looked at the 3 different monetary systems, or ways of how institutions or governments tried to build a sustainable monetary system, and it failed. The first one was the gold standard. That failed. The second one was using leverage, using credit debts against instruments, and we saw how that went with the subprime mortgage crisis that caused the financial crisis back in 2008. and now our current monetary fiat system, we also see how it's not sustainable because it's not backed by anything, no commodities backing it, hence giving it the opportunity to just print unlimited fiat currencies, which will in the long term cause loss of purchasing power and inflation as well. And this is not sustainable in the long run. And that's why I always say stable coins will play a major role this upcoming bull run, because they are required to purchase treasury bills, which are US debts or any other government currency that it will be. Those are US debts, or the specific government's debts. And you must purchase those debts to back your stable coin with. And like I always say, the top 5 stable coins are denominated in the US dollars. And this is why in the stablecoin industry, US is leading by far. And that's why the US dollar will still remain in the long run, in the mid to long run, they still remain the global reserve currency. Because if you are a leader in the finance, you'll be the leader in a global reserve currency. So this will help the US to kick the can further down the road, and it will give them more room to print more money, because now those top 5 large institutions issuing their own stable coins will be forced to purchase US debts, and this will give room for the US government to print even more money. So that's how everything will work out, and this is not sustainable, of course. So zooming back in to our platform, this is how we're addressing those 3 key challenges. The first way we address it, of course, we're addressing inflation by having a banding mechanism. We started, first of all, with 1 million tokens alone. So we're doing the opposite. We can't print or mint more tokens like the current fiat system is. Just keep printing more and more of it, causing inflation. Same issue is also with currently in the crypto space. A lot of so-called blue chip tokens keep printing and minting. Keep minting more tokens, causing inflation. We did the opposite. We have a limited supply, total supply of 1 million tokens. And out of this million, with every trade, 1% is being banned, and it's being removed permanently from the from the total supply. Let me show you. You see how we started with 1 million in total supply. Right now we are sitting at 974,000. So we cleared 25,000 BRL tokens, which are taken from the total supply, meaning we are doing the exact opposite. So that's how we are addressing the inflationary challenge. Instead of minting endlessly or printing endlessly and causing hyperinflation, which is not sustainable in the long run, we are doing the opposite. We are actually removing those tokens completely and totally from the total supply, ever decreasing the supply. In the long run, that means it increases the purchasing power, and it adds more value to that specific token. That's the approach we took, and that's how we tackle the inflationary challenge. Now, we saw that the next challenge was liquidity. Liquidity is a major challenge. We highlighted how our largest cryptocurrency, Bitcoin, is in a real liquidity crisis right now. And the smart money, the smart institutions with economics PhDs and physics, those who understand how economic works, they are removing their Bitcoins right now from the exchanges, understanding that there's not enough liquidity for them anyway. And now they're using the already authorized Coinbase futures trading platform to bet against the market so that they can take advantage once the market starts crashing again. And that's how draining and benefiting from the crash. And as they're also benefiting from the growth and from the bull run as the price of Bitcoin is going up. So this is how we are addressing it. We are using 3% from the trading fees and adding it into our liquidity pool. This will stabilize the price, and this is where we address the sustainability aspect of this, because liquidity brings stability. And besides just using the trading fees, we are also having NFTs, and these are boosters NFTs. These are NFTs with use case. These NFTs, you can purchase a maximum of 5 of them, and then this is how you are going to maximize your USDC distributions. If you decide to only stake your BRL tokens alone, you will only receive 70% of the distributions, of the USDC distributions. However, if you opt to purchase 5 of these NFTs, you will get 100% of your USDC distributions. So we incentivize those who purchase these NFTs to max out their USDC distributions. And 100% of these revenues generated from these NFTs, which are, by the way, unlimited. This is an unlimited source of revenue, and it will help us as we scale, as we grow as an ecosystem, to always have an endless and unlimited revenue source. 100% of the revenue generated goes towards liquidity. It's being added into the liquidity pool. Our third way of generating revenue is by staking our 10% BRL reserves. We are staking it in our staking platform, and we are also generating USDC distributions. The way our staking platform works is very unique. Unlike other staking platforms that are limited between 30 to 90 days of rewards, and these rewards, they usually give them to you in their own native tokens. Major, well-established institutions, blue chip institutions, such as even Uniswap, Aave, Lido, and many, many more, Compound, they all have staking platforms, which they hand you as rewards, as distributions. They give you their own distributions, and hence it will cause the chart to look something like that. For example, Aave. If we zoom out of Aave, Aave has an amazing staking platform. However, because they keep minting their own tokens and causing inflation, this is how, despite them having a volume of 360 million just in 24 hours, 360 million in 24 hours, a chart shouldn't look like this with close to 400 million in volume. This is not a 400 million volume chart right now. The way our ecosystem is built, if we even had only 10% of that 360 in volume, which would be 36 million in volume, we would be burning, 360. We would be burning 3.6 million worth of Bullrun on a daily basis. That means we would be adding close to 10 million US dollars worth of liquidity on a daily basis. And we will be accumulating another 3.6 million in USDC for those who decide to stake, and this on a daily basis. 3.6 million in USDC on a daily basis for stakers. And as long as the volume keeps going, this is how we maintain a sustainable ecosystem. This is how we address sustainability, not just by being deflationary and by adding liquidity in 3 different ways: through taxes, through revenue of our NFTs, and through staking our reserves, and also by not issuing our own native tokens, but rather by issuing USDC stablecoin, which is the 6th largest cryptocurrency right now. This is what we issue out for those who decide to stake the BRL tokens. And if you want to max out 100% of your distributions, we have these NFT boosters that you can purchase to max out your distributions. So we addressed liquidity, we addressed inflation, and by addressing liquidity and inflation, that's how you address the sustainability aspect of it. And to be sustainable, you need more. Even we went even further, and are using a staking platform. If we go to holders here, the number one wallet is our staking. This is our staking contract. So over 58% of BRL tokens in circulation are being staked. This means they're being taken out of circulation. This increases purchasing power. Nobody's intending to sell them right now. They're the ones that when you stake, like I showed you, and we even had only 10% of the circulation of the volume of our other blue chip institutions. These stakers are earning USDC. They are being rewarded USDC based on volume. To keep it sustainable, our ecosystem runs on volume. The more trades are happening on our platform, the more sustainable it is. The more tokens we accumulate, the more liquidity is being retained. The more the more tokens are being burnt, and the more USDC we accumulate to give out as distributions. So this is how we address the three challenges we just discussed, starting Saturday, Monday, and today. It's the liquidity part of it, as we highlighted that it's a crisis. It's an existing issue that's plaguing the industry. So this is how we address inflation. This is how we address stability. And now today we also show you how we retain liquidity in three different ways. And that mechanism is amazing because it works great. We are banning tokens, sustaining our ecosystem, being deflationary. At the same time, we are retaining liquidity, meaning that we are adding USDC into the liquidity pool, as at the same time we are removing BRL tokens from the liquidity pool through our banning mechanisms, reducing our total supply. And then we are issuing a stable coin that is the 6th largest cryptocurrency in the space to our stakers as distributions based on the trading volume on our platform. This is how you develop a deflationary, liquidity retaining, sustainable ecosystem. And this is what you want. This is the type of platform that you want. And you want a platform that is addressing real industry challenges. And this is exactly why we developed the Bullrun ecosystem, to tackle existing real world challenges in a very sustainable, deflationary, and stable manner. To add to it, we are not paired with Ethereum either. That is inflationary and based on that is with any other cryptocurrency that is volatile. We are paired with a stable coin. This helps keeping our ecosystem stable. So liquidity brings stability. But in addition, we are paired with a stable coin, which brings even more stability. So this is how we address the stability issue. We address the liquidity issue. And of course, this all brings stability into the industry. So we zoomed out, we looked at the challenges on Saturday, on Monday, and today. And then we're closing today this series by bringing it back home, zooming in, and pointing out how our ecosystem is working. Like we mentioned before, if you talk about Bullrun, you're not talking about a cryptocurrency. You are talking about the technology behind it and the entire ecosystem behind it. And the best way to do this is you want to take advantage of this digital ledger technology. And this is why you see these large institutions are getting involved into the crypto space. That's why you see Swift wanting to bring its infrastructure on the blockchain. This is why you see institutions such as Visa that have been around for decades and are profitable are coming on chain, on the blockchain, because it's more effective, it's borderless, it's trustless, and you can track it, you can verify it. You don't need a third-party auditor to verify it for you. It's on chain, you can verify it yourself. So it's the technology that these large institutions are behind. And this is why we're using that same technology as on our platform, on our ecosystem, to build a platform using the blockchain technology that is deflationary, sustainable, and that gives back in a manner that is sustainable. So this is the message for today, community, and this is what we have for you today. We always lay a large emphasis on educating about the industry, the market, the challenges, but also the opportunities that present themselves within the industry. And like I always say, those who come with solutions that are effective, that are proven, and ours are, we came out of the bear market with a 64% liquidity to market cap ratio, which is the highest in the industry right now. And we came out with a 2.5% burn rate that we already had. And all this with basically no volume whatsoever. So once we have completed our ecosystem by onboarding and building and completing the ecosystem, and so that we have consistent volume, we generate consistent volume. This is the last piece of the puzzle that will really catapult us in realms that have not been seen in the crypto space. And this is why we take our time on a weekly basis to educate you as a community, to inform you about the industry. We want you to understand what money is, how money works, how fiat works. We want to show you how the different ways the governments have tried to build a monetary system that is sustainable but have failed. And we also show you how liquidity is a real threat to the industry, and that we are taking an approach that is solution based, and that we have a proven record getting out of the bear market with great metrics, great numbers. This is the message for today. We really hope it was informational and educational, and if it was inspirational to you, the better even. So as always, this is what I have for you right now. I like to come full circle back to you and to check with you if you have any follow-up questions, if you have any other feedbacks that you want us to break down, or you want us to just clarify. This is the opportunity. This is the platform for you. Let me share a single screen now so I can go through your comments, and then we can wrap up the session of today. I'm always very excited about these community events. It's a platform for us as a community to just highlight and talk about the industry, because a lot of people who are fearful about the industry are fearful because the lack of knowledge. Knowledge is always key, and an informed community, an educated community is a strong community. This is why we lay emphasis on this. And keep in mind, our 4 pillars are always, of course, liquidity, it's security, it's social network aspect of it. And these are fundamentals. These are our 4 pillars of fundamentals that we lay, and education is the 4th one. We like to educate the community, and we do this in a consistent manner so that we are all on the same page. It's very important. Let me now come to the community. Let me see what you have. Hopefully you have if you have any feedbacks that we can go through and talk and discuss. Let me check on you right now. My good brother Franklin, always beautiful to see you within the community. Nice having you here with us today. We are here again for another soul lifting session in all ramifications. Very well said. I'm very thrilled having you in the community. We are very happy having you here. I hope you had this session was informational to you. This session would not be complete without Mr. Bright. Nice having you here, Mr. Bright. You're very much appreciated. Always nice seeing you around in the community. Bullrun ecosystem, king of liquidity. 2 seconds. Absolutely, very well said. This new digital ledger technology, we have to take advantage of this technology to build and to develop an ecosystem that is sustainable, deflationary, and that retains liquidity. Once we address those 3 challenges and coupled with a utility that brings in steady volume, we will have an amazing platform that we can build upon. And we would have built something that doesn't even exist in this space. So we are all part of history right now. And we are all part of this movement that we are in right now. And that's why we always want to keep you educated on a consistent, on a weekly basis. And we encourage you to bring in questions, use these opportunities to just educate yourself and understand not just our ecosystem, but the entire industry, how it works. And then that's when you will appreciate what we do and what our platform does. It's adding value into this space. CryptoRiser, nice having you here also in the community. Greetings, BRL family. Another live session with our very own brilliant Mr. Steve. You are all brilliant as well. Thank you very much, CryptoRiser. We all appreciate you as well for the beautiful banners you make, for the energy, the positive energy you bring, and your consistency. That's very valuable for us as a community. You're very much appreciated. Absolutely. Glad to be part of the BRL family. We are happy to have you here as well. This is great. The liquidity crisis is greatly underestimated, although it poses a real threat to the crypto industry. Absolutely. This is exactly what we discussed. Many really underestimate the threat that liquidity is posing in the industry, and this is something that we really need to understand as an industry, not even just as a community, but as an industry. And this is why I'm saying once smart money starts coming in and people really understand the added value that we bring and the proven concept that we have with our platform, and that we don't just have a token, but we have an entire ecosystem utilizing the digital ledger technology or the blockchain technology to build an infrastructure that addresses the 3 major challenges in the industry. And we just looked at those challenges Saturday, Monday, and today, which are inflation, sustainability, and liquidity. And we're tackling all that within our ecosystem. Happy November, everyone. So this is really nice. A new month, and we're really close to the year end, and we're really close to the Bitcoin halving. We're really close to the approvals of these spot ETFs. But like I showed you, the euphoria is great, but the unknowing are going to FOMO into that and walk right into the wall. So this is why we really like to inform you, give you the bigger picture, and show you the challenges that we face so that you can make educated decisions on your own. We're not here to sell you anything. We are not financial advisors. We're just here to paint a picture for you on a broader base, zoom back in our ecosystem, and then highlight how we are tackling those challenges, and then package you this in a very informational, educational, and inspirational package. So this is what we're about. Mutakwa, Mr. Mutakwa, Miss Mutakwa, thank you and greetings to you all. Thank you, Steve. Thank you very much to you as well. We are very happy having you in the community, and thank you also for always being consistently involved within the community. We are very happy to have you here. Miss Sharon, Thank you so much, Mr. Steve, for going all out tonight. BTC updates always make me cringe. We are truly informed, empowered, and inspired. Very, very pleased to hear this. We're also very grateful to you. You're always going all out as well for the community. You're very much appreciated, Miss Sharon. The one and only Miss Kina Rio. Nice to see you in the community. Nice having you within the community. And we see a large crowd from the women survivor group as well that are here with us. Thank you so much for your support. We are so thrilled and we are so happy to have you here with us as well, Ms. Kinario. This is the best time to educate yourself, just as the bull run begins, so you are prepared. Very well said. Absolutely. I believe education, knowledge is power. We can't stress this enough, because if you know, you know. And you can't be fooled. You can't be, hype won't move you, because you'll know exactly how the market works, how the cycles work, what the industry is about, what the challenges are, what the opportunities are, and then you'll make an educated decision based on those facts. So I really appreciate everybody that chipped in, and everybody that was able to participate today. We are very grateful for another month that we're about to start, that we're starting, and we're looking forward to another great month ahead of us. And also, of course, I can't go without saying we have our other community tokens as well, Killer Whale and Survivor, that are amazing and that have the same deflationary concept aspect in them. And this is key. This is very important. These community tokens are launched because the security aspects that we are tackling. There's a lot of scams, and in 2022 alone, 3.5 billion worth of scams have happened. Rug pulls and honeypots and all that. It's a cold space, and also a lot of exploits that happen. So to shield our community from all that, we are launching our own community-based tokens that are secure, that are going by the same principle of staying deflationary and stable, and this is why we do that. So I advise you also to please let me do this. Of course, we have the Killer Whale. This was our very first one. It has deflationary aspects of it. It's a 1% tax, and that tax wallet has been blacklisted, of course, making it a ban wallet. 100% of the total supply has been placed in the liquidity pool. Why is this so important? This means there are no whitelisted pre-sale tokens that will be diluting and inflating the liquidity pool. What's happening is it's one way out. So as the trades are happening or transfers, 1% of Killer Whale tokens are going to be banned and locked up in that wallet that has been blacklisted. And this is another very inflationary token with the same principles that we have. And of course, the contract has been renounced. This brings more security to the contract, avoiding exploits by the devs or anybody else. This ensures that nobody can alter the contract. It's been deployed on the blockchain and nobody can change it. Also, of course, the liquidity has been locked for 100 years, meaning that we don't have to worry about any rug pulls. The liquidity is tucked away for 100 years. Most of us won't be around in 100 years. So that's how long the liquidity is going to be locked. And this is the same sentiment that we have on our one and only Survivor tokens. This is the first and only, in my case, challenge me and prove me wrong if I'm wrong. But in my knowledge, this is the only dedicated woman token on the blockchain right now that I know of. And this is beautiful. It gives women the platform they need and to come together to empower each other, to educate, inform each other. And this is such a highly vibrant and dynamic Telegram group that they have. Please, one of you women's one of you queens from the Women Bullrun token, if you could be so kind and share the Telegram tags. And meanwhile, I'll copy the address for those who want to really be part of this beautiful movement to empower women. This is dedicated to the women, and it has a great purpose, has a great vision, and it has multiple dedicated YouTube channels as well that highlights the community as well, and it has a great cause. So this is something that is, let me share the address with you. This is something that is has a great purpose behind it, has a great movement behind it, and it has the same concepts as well. One thing I want to highlight here is, again, it also has a 1% sales tax. This is the Burn wallet. On every trade, any transfer, 1% goes towards that Burn wallet that has been blacklisted, meaning it can't be touched. Liquidity also has been locked for 100 years. The contract has been renounced, and also 100% of the survivor tokens are in the liquidity pool, meaning that with every trade, it becomes deflationary. We already talked about the importance of deflation, and this carries on the same initiative, the same idea, the same vision. And I'd like to show you here. If we go to Etherscan, and you see that the number one wallet is, of course, is Uniswap, the trading, the liquidity pool that is locked for 100 years. And then the number two wallet here, the second largest wallet, this is the Burn wallet. It already burned over 5% of the tokens. So this wallet is a Burn wallet. And this is the largest wallet just behind the liquidity wallet. And it's the Burn wallet. So, and it will ever increase. It will keep increasing with every trade, with every transfer. This wallet keeps getting bigger and bigger, and it accumulates more survivor tokens. And it's the Burn wallet, and it's the largest wallet in the space right now, within the Etherscan right now. And of course, the same, excuse me, goes towards Killer Whale. Same concept as well. So these are deflationary tokens with sustainability in mind. Also, of course, if you go to Token Sniffer, it has 100 out of 100 score. It has a clean contract. This is very important to us as well. Security plays a major role, and like I said, it's a very clean contract, and it also has 100% in community trust on DEX tools. So we gave you the website down below, or join the Telegram group. Just be part of the movement. It's an amazing movement, and it's something that has not been offered, or it's not in the space right now. We are the first to really develop and offer such a beautiful platform to empower women of all corners of the world, and to just come together and empower each other. This is what we have for you today, community, and it was so important for us to share all this information with you. And I hope the message came across today. I hope it was informational and educational to you all. And let's see, maybe there's some more comments meanwhile. Yes, thank you very much, Ms. Sharon, for putting the Telegram group here as well. So those who are interested, of course, men are encouraged as well, to support the movement. But this is a dedicated token for all women within the crypto space that are enthusiastic about crypto and also want to have that sense of community and just feel right at home. It's of course the center of everything is crypto. However, it's beyond crypto. It's about, being human. It's about sharing experiences and going through life's challenges together and having a group, a support system while doing that. So this is what this movement is all about. What's here? We all need to go back and listen to the last two community events. Inflation and sustainability were discussed in detail. Exactly. This is like what we discussed as well. It's very important that we do that. It's key for us to be educated and remain educated. Also, the community, Bullrun.Live community Telegram group is here as well. Thanks again, Ms. Sharon, for putting this on. And these are the last comments right now. So community, from my side, from our side, this is what we have for you today. I hope you can benefit from this session today. Thank you everyone that was able to make it today on this live stream. It's very important for us to be engaged with these in these community events, because it's all about algorithm, it's all about engagement, and this is how we bring awareness to ourselves. We always want to highlight and talk about the entire industry first. We always like to zoom out and educate about the challenges, the opportunities that this blockchain technology is bringing us. And then we like to zoom in, build bridges, build parallels, highlight our strengths, and highlight the approach, the problem solving, the solution solving approach we take, and then get into details how we go about tackling those challenges. Like I said, we always believe that the ecosystem that will solve these challenges will be on the top at the end. That's just the nature of things. With that said, I want to wish everybody of you a wonderful rest of your week. Looking forward to Saturday. That's when we'll have our community VC. We'll be happy to have you join our VCs and be part of these events as well. If you have any follow-up questions, for those who will be listening later on, welcome to the Telegram group. You can join us there as well. And from our side, wherever you're from, we wish you a wonderful rest of your afternoon, evening, night. And it was a pleasure having you here with us today. We're looking forward to seeing you soon again. Thank you, Steve, for another very informative and educational live stream. Thank you very much as well. It's always such a pleasure and hearing from you and seeing you here. Also, thank you for participating with us, Mom. So thank you very much for everything. Like I said, we're going to end this session at this time. It was a pleasure having you here with us today. Wishing you all a wonderful rest of your week, and hopefully looking forward to see you all on Saturday in our Telegram VC on the main account, Bullrun.Live. With that said, happy Thursday, everyone, and see you soon again. Bye-bye.